Good morning. I hope you all are having a nice start to your weekend. For those that celebrate Christmas, Merry Christmas, Happy Holidays. I'm doing a fairly substantial video today, kind of going through a few things, a few concepts, Bitcoin, Microstrategy, Mara, and then my overall thoughts on the ETF, if that's the catalyst, if that's going to get approved. My thoughts on that as it relates to the rest of my viewpoints on the markets. And just as a reminder, I'm not a financial advisor. I don't know what's going to happen in the markets. I have very strong beliefs, but nobody knows what's going to happen. Don't take this as any kind of financial advice. Do your own research. Just use what I'm presenting here for educational purposes. Please and thank you. Okay, so where we're going to start this morning with this video is kind of zooming back to one of my favorite charts. On the high time frame, we have the weekly chart of Bitcoin up since its inception. And my claim has kind of been that we are in this fourth cycle that began in late 2019, January 2000, late 2018, January 2019. And we've been in it. And before I get into some of the things that I want to highlight on this chart and revisit, first I'm going to pull up a diagram here that illustrates two things. Excuse me. Two things that are of importance as I think about this next phase of the market. And they're two separate things, okay? My background is in the medical technology industry. I've worked for startups, and what we've attempted to do in my career is identify technologies that are disruptive to the status quo. And much like the business I'm in, I see a lot of parallels with what Bitcoin is doing, much like what the iPhone did, 15, 20 years ago. And this concept of technology adoption was actually studied in a book called Crossing the Chasm. And this diagram that I have illustrated at the bottom, where it says the chasm, and it's got this huge gap in it, basically seeks to understand how disruptive technology is introduced to the market and what the most important segment of the market to capture is, and how that's captured. And it sought to divide up the market into segments, and you have your innovators, and that's less than 3% of a market. So if a market's 100 people, you've got something that's really disruptive, like, for example, the first iPhone. You don't expect that 100 out of 100 people are going to pick up that iPhone and start using it. And you don't have a lot of marketing. You have a lot of potential hype, but it's very misunderstood, right? Kind of like when I first saw the first iPhone, I'm like, what the heck is that thing? I'd never use that. This BlackBerry is all I'm going to ever need. And yeah, that's really, really cool bubble phone. 3%, 2% of the population went after it, okay? And then you have your early adopters, which is the next maybe 10, 12, 13% of the market that, once the bugs are kind of worked out, they're not the cowboys out there just grabbing the newest technology, get involved. And that's an important segment of the market. But most startups, most disruptive technology fail when they can't go from that early adopter innovator phase, because that's the smallest percentage of the market, to the biggest percentage of the market, where you see this bell curve, that early majority, that middle 50%. And these are the folks that everyone is trying to get their technology in the hands of. That's how these startups, these disruptive technologies, go from an idea, concept, implementation, and then mass adoption. That's the key, that the early majority. And this early majority only get involved after there's market validation. There's market validation. So people they respect, institutions they respect, have already accepted the technology. So there's as much of a mental aspect to this validation as there is for as a technology component. The iPhone 5, I think that the 4 was my first iPhone, so it had been around for 4 or 5 years prior to me ever buying it. But seeing the new versions come out, okay, that looks like something I could maybe, you know, get involved in. Some people on my team had them, and so it's more validated around me. And so not only does adoption help with that, but PR helps with that. You start seeing Apple everywhere. And so where we are right now with Bitcoin is somewhere, you know, in the innovator early adopter stage, and probably really still in the innovator stage. If we look at $900 trillion of capital in the market of the market cap of Bitcoin's under $1 trillion, and technically speaking, we are still in that innovator phase. And what we're seeing around us today, in terms of these institutional old money fund managers attempting to get an ETF up and running and bring that to the market, is what they're trying to do is, and what they are doing, and what the PR is designed to do, is go after this early majority. That's what they're doing. That's the playbook, the validation from people that are respected. And this early majority, in terms of capital allocation, if the market for all the money that is invested or sloshing around in the world is 900 trillion, and we're only at $1 trillion, there's a long way to go. That doesn't mean, however, that price follows your expectation. And at the top of this diagram, what I have here is actual expectations versus that adoption in terms of value in real time. And so once you get to this early adopter phase, you really get a peak of inflated expectations, right? Because everyone's saying the same thing. Everyone's saying, we're here, the institutions are here. Or back in 2000, I think it was in the 2000s, Amazon posted their biggest year-over-year growth in terms of revenue. It posted, it was 80%, I believe. They doubled in revenue in their stock. So that's peak of inflated expectations. And they were somewhere here on the adoption curve. Their stock went down 80% the following year. So just because you are potentially at this stage does not mean that if A, then B is going to happen with the price. And so that's an example of peak of inflated expectations. And then the stock dropped, and that's where truly it started its massive, 10, 20 year, 25 year run, and just went up only, right? Up and to the right. And so I contend we are somewhere here on the innovator side of the scale in terms of adoption. We have the signal of the gatekeepers opening up the door to the rest of the market, which leads to this peak of inflated expectations. That's where I'm kind of contending we are right now. Okay, sorry if that took a little while, but I think that's really, really important to frame this idea here. And what we're looking at right now is the entire price history of Bitcoin, and what I consider this first secular bull market that we have to be prepared for, that may lead to that peak of expectation if price ends up resolving in the manner which I think it will be. And the true mass adoption of Bitcoin that potentially is coming, in my opinion, isn't going to play out in price necessarily how people think it's going to. And so that's the key to frame the rest of what I'm sharing here today. And so back to this chart, we've got my cycles identified. I don't know how I just shrunk that. Let me go back to, okay. Got my cycles identified: cycle 1, cycle 2, cycle 3, cycle 4. Okay. And just to review, the most important consideration in these movements, in these cycles, I reviewed in past videos, but just to reiterate, we've had at least three impulses in each of these cycles, marked by RSI, relative strength index, getting over 70. And I'm not going to go through an Elliott wave tutorial here, but most of you that have been following me have at least, I think, some base understanding based on my explanations in the past, why I think the Bitcoin cycles have followed the Elliott wave principles very, very closely in terms of wave of emotions, trough of despair, wave of emotion, trough of despair, and then final fifth, 1, 2, 3, 4, 5. And within each of these cycles, we've got, it shows up. It really shows up. So where we have 1, 2, 3, 4, 5 blow off, in cycle 1, that shows up in RSI over 70, RSI over 70, RSI over 70, 1 impulse, 3 impulse, 5 impulse. Okay, that's cycle 1. Now let's go to cycle 2, and maybe I'll do it this way to make it easier for you all to visualize, really zoom in on these individual cycles, because I know this stuff can get tricky to read on your phones. So cycle 2, let's take a look at these major impulses marked by RSI. That's what I care about. Relative strength getting over 70, that's overbought. That tells me there's momentum behind the move. And that's what I'm looking for. And so we've got 1, 3 impulse, 5 impulse. So again, we've got at least 1, 2, 3 impulses, and that's an Elliott wave principle. And they showed up as well on price. Okay. And so that's cycle 2. Zooming into cycle 3. Let's see if we had at least 3 show up. And we did. Right? 1, 2, 3, and those marked impulse 1, impulse 3, impulse 5, and that showed up as well on price. Okay, and now let's go into where we are today, which I'm contending, have long contended, is this the end of this fourth cycle, and 1 impulse, 2 correction, 3 impulse, 4 correction, and I believe 5 impulses in front of us. Why isn't that showing up? There we go. Okay. There we go. Okay. And we see that price also has followed this as well. 1, 2, 3, 4 correction, and 5, I believe, is in front of us. And so the key technical indicator for me back in October was this RSI getting over 70, because we were missing that for this cycle. We had it happen twice, impulse 1, impulse 3. We didn't see that. We did not see that with this corrective move in November of 2021. So now we're over 70. We bounced off the top of overbought, and we are setting up for what I believe is this final parabolic rally that is going to take somewhere between 2.5 to 3.5 months. Maybe it's 4 months, somewhere around that 3-month mark. And that lines up in several ways with the way that these other conclusions have taken shape, in that in each of these previous final impulses. So we're moving from 4 to 5 here. Okay. So 3, 4, 5, that's what I'm talking about. 3, 4, 5, that's what I'm talking about. What has happened in each of those 2 situations, and what was the anatomy of the blow off? Well, in each of these situations, the key fib level was, if you look at the previous all-time high and the current cycle low, it breached the 4236 extension. Okay, it breached it. It got a retest, and then it blew off to fifth. Same thing happened here. In cycle 3, we breached it, we had a retest, and then blow off fifth. And so what I'm looking at right now is a very similar structure unfolding. We've got the 4236, which stands at 72,840. I see a breach of that, retest prior to final blow off top. Okay, and that brings me back to the chart I just shared with you with peak expectations, right? everyone, the market is telling you that we've reached that point of mass adoption is in front of us, right? We meet the point where the biggest part of the curve is now in front of us. New cycle bull market, new cycle, super cycle, $1 million in 5 years, whatever. So many narratives in my mind are going to be coming at us. But that does not mean that's peak expectation. That does not mean that price necessarily will follow. So I know I've been asked what my thoughts are on if we get to this. So it's all about if, right? There's the probabilities here, and I'm saying the highest probability in my book is we're in the late stage fifth impulse. Let's see where that finishes, if and where that finishes, and then I'll entertain what I think is going to happen after that. I don't want to jump ahead of myself right now. Okay, that is that chart. Next chart, we're going to this one. This was a fun little exercise I did yesterday, and the miners have been ripping. Mara's been ripping. MicroStrategy broke out on Friday to a yearly high, and the question is, why is it happening? If Bitcoin is ranging, or is it a local top? Why would these things be accelerating as much as they are? Well, let me remind you, let's go back to this exercise I did. And for those of you who've been following me for a while, right? I love Wyckoff. In various formats on the high time frame. It guided me all summer. Actually, since we broke out of the high time frame accumulation range in March 2023, if you can believe that, literally hung out in a sign of strength range for like 6 months. But as Bitcoin has entered expansion, starting in October, it's entered a series of reaccumulation phases, right? And this is one that I posted a lot on my timeline in November, with these beautiful reaccumulation Wyckoffs. And this is the channel, really, right? This is the channel. Just look at this, like just a upward sloping channel. And then it broke out of it. Expansion happens after SOS. And so where are we now? We are in another, in my opinion, low time frame reaccumulation, Wyckoff reaccumulation, where you've got preliminary supply, PSY, right? You've got, let me get that out of the way. You've got your automatic rally, you've got your shakeout, you've got your secondary test area, you've got the creek, which acts as a lot of resistance, right? This is the creek that acts as a lot of resistance. And then we had this beautiful spring event right here, right? That's the deviation. That's, we're going back down. Remember those 36, 37, 31K calls, right? Those happen right in key inflection points in the market. And that, I believe, was a spring. From there, we see this creek up here, which is at resistance, broke through that creek, got just a beautiful retest of that. And now we jumped across the creek and simply consolidating at this last point of support, this LPS region, sign of strength region, prior to what I believe is expansion, which I believe is coming next. So we shall see, but that's my view on low time frame analysis through the lens of Wyckoff. Maybe I'll just do a quick low time frame analysis. Let me go to Mara, MicroStrategy, and then I'll finish with low time frame Elliott wave count. Okay. So Mara is one we've been following for a while, since really late August, right around this ABC correction into the October lows. And this is a real problem. This chart, this name is a real problem for short sellers, for dealers that are short this name. I mean, technically, maybe the most powerful chart in the stock market right now. That's my opinion. That's not a fact. But what we're seeing here is very similar expansive behavior as we saw back in December 2020. And so the question is how far can this run And most certainly the question on everybody's mind is, when are we getting a pullback? How severe is that pullback going to be? And I don't know. I don't know the answer to that. These things are almost impossible to forecast on the low time frame, at least in my opinion. I'm not that good. What I like to do in these types of situations is zoom out, look at a weekly chart, and just take in the information and attempt to interpret what this information is telling me, superimpose that on what that information told us in the past, even though the past is no guarantee to what's going to happen in the future. And so if I'm looking at it through that lens, currently we have, let's just look at what we're currently presented with right now. We've got this massive inverted head and shoulders. We have this very important supply range, okay, that goes back all the way to 2021. And that was breached. That was a key technical level that was breached last week. And in the technical target of this inverse head and shoulders is measured move into the $119, $123 range. Okay. When is that going to happen? I don't know. I wouldn't be surprised if that happened in the next month. I wouldn't be surprised if that happened in the next 2-3 months. The path is going to be the hardest thing to project. There's going to be some volatility, but that being said, there's the buyers are in clear control of this name, and so let's just take a look at some areas, and we're pointing your eyes to RSI. And I have this line not because it's a resistance line, but right to denote right where RSI is on Friday of the close. Okay, 81.13. That's what I have circled there. When was the last time we were at 81.13? Monday, December 14th, or the week of. It might not have been that day because this is a weekly chart. So I've circled it there. Okay. And I'm also go back to, let's see, the week of July 27th. And I'm going to circle that right there. All right. What happened from those points forward? Well, the week of July 27th, the following week it gapped up and went from $2.14 to $5.34. All right, what does that tell us? It doesn't really tell us that much. That was over a double in the following week, but that was also early on, marked the conclusion of this first wave, right? And then what followed was a very substantial correction, Okay, so that's one N. What's next? We're going back to Monday, December 14th, 2020. And at the same point, Mara was in this, the candle range was $5 to $9. The following week, it was $9 to $14. And then the third week after is when it actually gapped up to $26. And this was the four correction you got. This is what I'm talking about. I'm not trying to get cute in this area with my positioning, because you know a 3-4 correction in this minor 3. So this is what we're looking at. This minor 3 and this specific 3-4 correction didn't provide any relief to anybody trying to trade out of this, right? Because at the close. The week prior, it closed at 11. It gapped up to 26. I mean, you can't make this stuff up. And then it closed the end of the week at 10:31. So, I mean, that's a huge move within the week. So, I would much rather be in a position going into that week at, let's just say 1084, not worrying about it, and then coming back in the following 2 weeks, 3 weeks, 4 weeks when Mara hit $50 to look to de-risk my positioning. And so, what does that mean for where we are now? It just means I don't know, right? I don't know where this is going in the short term. My 3, so if we're going back to this chart here, my 3 has us somewhere in the $60 range. But even that, I'm not concerned with. My target here is $123. My target here is $123 for this third wave. The fifth wave, my target is somewhere between 197 and 317. So those are the numbers I'm concerned about, and we aren't anywhere near them. So that is that's my update on Mara. Let's look at the Mara BTC pair, because again, this is one we've been following for a while. And folks, I do apologize that this video is getting really, really long. I just have got no family today. My daughter is with her mom, and I got a lot of time, so I'm gonna have fun with this, and this is what I enjoy doing. Let's go to Mara BTC. And all right, Mara BTC. This is really this is satisfying to see this play out. This is satisfying to see this play out. Why is it satisfying to see this play out? Because I've been talking about this chart since this area here, and had been excuse me, and had been comparing it to this area in here. And so far, it's playing out. It's really playing out in a major way. So now the question is what happened? What do I think is going to happen next? And what are the probabilities telling me are going to happen next? Well, the probabilities are telling me that the type of outperformance that we've seen so far, we need to mute our expectations in terms of its relationship with Bitcoin. Okay, it's not talking about, this isn't anything related to any of the targets I just presented. Why? Well, because we had coming out of 1, 2, 3, 4. I mean, nothing moves up in a straight line, and so we had a 1, 2 here, 3, right? Could go up next week, but coming back here a little bit is completely healthy. And I wouldn't be surprised to see this thing break up and form maybe another. Let's just take a look at something here. Where's the next point? Yeah, I wouldn't be surprised to see. I mean, Mara is just demonstrating so much strength here. And that's really this range high going back to 2018. The type of strength this is demonstrating is akin to something like that. Like I would not be surprised to see it do something like that, where here we had a deviation. Here, I'll be very curious to see what happens in that area. But that's neither here nor there. What I'm attempting to illustrate here is that the pair is in control and the trend is up. Okay, that's an uptrend, and in an uptrend, you've got ups and downs. That's all I'm looking to project there. I'm going to do Riot now because I always get a lot of questions on Riot. Let's see what I know Riot's lagging big time, but let's just see what we see on its pair. And its pair is most certainly lagging, right? Because in relative terms, this is where Mara is, right in that area. And this is where Riot is. This is Riot denominated in BTC right now. That's what I have up, okay? And so what do I see on Riot? I see it's having trouble in the cloud. Let me really zoom in. It's having trouble in the cloud, but it's out of the cloud, right? We are poking our head out above it. This key range here, right? There's a lot of resistance in this range, okay? And we're over it. This is the second week in a row that it's closed over it. And I also see a type of, just consolidating in this tight little ascending triangle type of structure. And so my expectation is that it's going to catch up. Could I be wrong? Absolutely. But my expectation here is that there's upside. There's upside to come. So in terms of its valuation against relative valuation against denominated in Bitcoin. Okay. I don't know how it's going to perform against Mara. I get that question a lot as well. All right, next. MicroStrategy. MicroStrategy is looking fantastic on the weekly time frame. I put a chart out earlier this week noting that we'd literally been consolidating for 1, 2, 3 weeks at the 382 extension of this cycle high, cycle low. The 382 extension, measured extension, is that area right there, okay? And simply just consolidating above it for 3 weeks. And I think we broke out of it. I think we broke out of this little 3-week range. I've got RSI here on the weekly, which is nowhere near. So here are the levels. Here are the levels of interest for potential, local tops, right? We're nowhere near the type of power that you would see in the price action for me to say, hey, do I think we're near a local top? Actually, I think the opposite. I think we're just getting started. I think that this move, let me really zoom in here. I think this move on the RSI is very bullish. You literally have a bump up against overbought, breakthrough, retest, and now it looks like it wants to go. And that's what price looks like it wants to do as well. Could I be wrong? Absolutely. But I think our next target is this wave 3 target at around $2,000, which I think comes within the next couple months. My high-end target, the low end of the high end of my target is $3,200. I think I could see it getting up to $5,200 as well in the wave 5 peak. All right, next. Next is, I don't think I've done this one for you. This is MicroStrategy denominated in Bitcoin. And, this is kind of an ugly chart, kind of cool. What's the point here? The point is that this pair has been in a decisive range for a long time. Here's the top end of the range. Here's the bottom end of the range. Okay, bottom end of the range, top end of the range. We had a deviation out of this range. Okay, now that's that. Let me get rid of all that ugly stuff. Now you can see what I'm looking at. Whereas when Bitcoin had its wave 3 top back in February of 2021, the week of February 8th, MicroStrategy hit its all-time high and hit the top end of this range at 0.0263 was a top end of that range. Where are we right now? Well, we've got this massive bull flag consolidation, broke out, then another bull flag, broke out, consolidation, and now I think we're breaking out again. And my target here, low end wave 3 is 0.0199, high end wave 3 for Bitcoin. So this is what I'm concerned with, is my targets for Bitcoin are in the 100 wave 3 target, the $100,000 to $135,000 range. And so I wouldn't be surprised to see MicroStrategy top out, much like it did when Bitcoin hit its wave 3 top, somewhere in the 0.0268 to 0.019 BTC range. Okay. So I just figured I'd share that with you because I think that's a cool chart and I don't do it very often. What's next? All right. Let me get rid of that. Let me get rid of that. Let me get rid of that. All right. Last but not least, all I want for Christmas is $50,000 Bitcoin. And Mariah Carey, I heard her sing that on a song the other day. I don't know if it's true or not. I don't know if we're going to get it or not. That being said, how is this formation tracking? It's tracking pretty good in my book. As I noted on a post a few days ago, where is it? I saw this correction that began on Friday, February 23rd. 1, 2, 3, 4, 5, A, B, C as being complete. And impulsive move 1, 2, 3, 4, 5, minor 1, 2 consolidation, and I think we're right around the point where, did this wick clear all the lows? Let's see. It'd be really nice if it did. Be really nice if this wick did last night. Yeah, that's a nice looking wick, right? Didn't get these lows all the way back here that I've got the line on. So that's still a possibility. That's still a possibility. The two possibilities I noted on the last chart I posted a couple days ago was, I think, a movement out or one of these guys. Okay. And so right now we haven't really gotten the decisive boom, right? This isn't decisive enough where you just run all these stops, just all these stops that are here, you run them and then it just takes off. But who knows, maybe that doesn't happen. And, you know, we're at the conclusion of this, how I've got laid out this minor two. Either way, I think major impulse is next. There's just no way around my feeling on that. And that's how I'm viewing the market right now. Major impulse is next, which takes us to, let me just go to the 5th here. Really zoom out for us. That $100,000 range to mark minor 3 of this major 5th impulse. And so that's how I'm viewing this. I don't know how much more there is to say. We gotta let the price action do what it's going to do. But again, I realize this is aggressive, folks, but that is the way I'm viewing this phase of expansion. This is pre-parabolic movement being demonstrated in real time. And last thing to remind you is that Bitcoin makes 98% of its gains in 2% of the time. And so when we wake up and you see if a 10-12% candle and it's, you know, that happened in 3 4 hour or 2 3 1 hour or a couple 4 hour charts, don't be surprised. That's how these things work. So hope you guys have a great rest of the weekend, and apologize for the lengthiness of this video, but I felt like I had a lot of content I had to go through, and that's what I did. Take care.